Hey, good morning. This is Mayor Valensky with Driving Markets. Okay, so let's just catch up. The markets last week were generally all down the whole week apart from Friday. And what happened on Friday? There was a technical adjustment. In other words, the markets had gone slightly into oversold territory in the short term, and the markets bounced as a result of that. So what you've got on Friday is that all the markets bounce on technicals. However, fundamentally, what we're talking about here is the trend is down overall on financial markets, whether it's the Dow, the S&P, and the Nasdaq. Obviously, the Nasdaq is leading the Dow down or leading the markets down across the board, simply because high tech and high growth stocks are high risk, and high risk at the moment is not flavor of the month, and investors are running for cover. So remember that even though there was a bounce on Friday, it could be deemed as a dead cat bounce. In fact, overnight futures markets are all down, whether the Dow, the S&P, the Nasdaq, the European markets, Far East and the UK are all down, and there is dollar strength. So the pound, for example, is on its route back down again. Something I want to speak about before we go into the other markets is Twitter. Elon Musk last week stated that he's going to put the whole deal on hold. Now, the deal on hold is simply because he got approval to raise $44 billion from the banks in terms of loans to buy out Twitter, and then he was going to put in part of his own personal cash, which would have meant that he's got to sell some of his Tesla shares. However, the cost of Twitter at $54 a share is just probably proving a little bit too much at the moment, considering the overall environment of the high-tech sector. Remember, Tesla is in the high-tech sector, and Tesla's come all the way down from $1,250 a share to around about the $760 a share. I did say on Driving Markets that at $720 a share, then Tesla could be a short-term buy, and it did touch 720 and then jumped up to 760, 770. That is just a guide as to where Tesla's going. So the fact that there is a risk on Tesla, and that could cause an impact, or has impacted the purchase of Twitter, and that's one of the reasons why Elon Musk has put it on hold. Twitter shares fell all the way down to $40 a share. Now, if Elon Musk pulls out, and I have to state here very clearly, I'm a big fan of Elon Musk, but if he was to pull out of Twitter, then you could see Twitter fall all the way down to $22 a share. Just be aware of that. That is very, very, very important if he pulls out, because Twitter has got very little future. Its marketing revenue, its gross revenues, its other advertising revenues are very, very unstable, and it's not a great media platform. In fact, in my opinion, it's one of the weakest media platforms amongst all the media platforms. So Twitter is, if Elon Musk does not go ahead, it's going to fall all the way down. However, something to be aware of, just because he's put it on hold does not mean he's going to come back in to buy it. And therefore, you could look at that if it goes to anywhere about the $36 or $35 level, you may want to go long on speculation that Elon Musk may come back in and unfreeze the deal. Then the shares will shoot up to around about the $50 level. But once he's out of this deal confirmed, then those shares are going to go all the way down to around about $22, $22. Look at Bitcoin. Last week, the stablecoins had the most extreme day and were completely trashed on the back of a technical short on Bitcoin and a technical short on Luna, which is supposed to be a stablecoin. Remember, the stablecoins are there purely based on the name stable coins. So when traders or merchants want to use any type of crypto, they can use a stable coin which is pegged against a major currency or an asset, and therefore supposed to be less volatile. But Luna dropped over 97% because that algorithm was broken last week by a hedge fund or a hacker, which managed to make stablecoin unstable, so therefore it takes away the whole premise of what a stable coin is. So I expect Bitcoin, not as a result of that, just generally to float all the way down to the 20,000 level. Some people are calling it 15, some people are calling it 10,000. That is possible, but I think short term, in the next week or so, it's going to go all the way down to around about the 20,000 level. This week you've got home sales in the States. That's a big number because as interest rates went up in the US, let's see what impact that has on home sales. That could be a big number to watch and give us direction as to the health of the economy. There is full employment, so that is a good point regarding the economy. However, the high-tech sector has begun to either freeze or lay off individuals, and that could stream down into the support services sector, which has been supporting the high-tech sector, and could lead to an increase in unemployment. But that's already weeks away. We'll look at those numbers later on. What you've got now is that look at the housing sector. Let's see how healthy that is from tomorrow and Wednesday, and let's see what direction interest rates will go as a result of that. Remember, inflation PPI last week was super high, much higher than expected, and that's had a big impact on people's overall views of where inflation is going. Oil was back up again to 112 last week, probably going to go higher in the short term, so I reckon by July we'll be back up to 125, 130 on oil. Gold's an interesting one, that's come off a little bit, but the main thing I'm following at the moment is inflation and interest rates. Therefore the dollar is also in sights because it is a safe haven and also likely to go up as a result of increasing interest rates in the States. Mayor Valensky, driving markets. Have a good day.